Hi guys and welcome back to the channel. Now you join me on my 6th month investing in a junior stocks and shares ISA for my daughter. This is an account I opened for my daughter in September of last year, and this is another monthly update where we'll look at all the details within the portfolio. In these videos I generally do a really quick market update at the start of the video, and then we'll dive into the portfolio itself and have a little look at some of that performance. Now the big thing at the moment is the US market. The tariff war seems to continue, and on the 3rd of March President Trump announced a 25% tariff on imports from Mexico and Canada that would take effect from March the 4th. This was alongside increased tariffs on China from 10% to 20%. This overall tariff war has led to significant market declines, with these countries launching counter tariffs which has quite heavily impacted the market sentiment, plunging the S&P 500 down further. You can see here the steep drop from the all-time highs mid-February. The S&P 500 dipped below 10%, entering correction territory before rebounding slightly this past week. One stock which has been hit particularly hard over the last few months is Tesla. Over the past 3 months, Tesla's share price has halved. Most of these concerns come from declining sales in Europe and China for Tesla cars. On top of this, there's concerns over the CEO Elon Musk's multiple roles. Now, putting the politics and car sales to one side, there seems to be a bit of a trend of boycotting Tesla. This seems to be hurting the brand even further, with people even setting fire to Teslas across Europe and America. Now moving on to the UK market, the FTSE 100 year-to-date performance has been strong. However, this past week has seen a slight decline over concerns over these Trump tariffs and also the chaos that erupted around Heathrow Airport. British Airways owners, International Airlines Group and EasyJet have taken big hits over the past month, which has all contributed to pulling the FTSE 100 down from its strong start to 2025. Now there's a lot of videos on YouTube covering things that have happened in the past month, and there has been a lot. But instead of doing that, I thought we'll just dive straight into the portfolio and see how these things have impacted our investments. Okay, so jumping straight into the portfolio, and straight away we can see our holdings. So these are basically all the investments within this account. Now, you'll see I went with a super simple strategy here and invested in a FTSE Global All-Cap Index Fund. So that's capturing stocks and companies from all over the globe within one fund. The key here was to keep things super simple with this portfolio. So for any new viewers, that's why I've gone with just the one fund. Now, performance, as I mentioned, the market's been quite volatile the past month. So I'll dive straight into the performance tab and also into the month tab. And you can see what we've added in this month, but also potentially where we've lost some value in this account. So following on from February here, you can see that we added the £60, which I covered in the previous video, and the back end of February wasn't great. So you can see there, the sort of personal investment returns for February, we actually lost around £25. And that kind of decline has continued into March. So if you can see here, in January, we were up almost £92 worth of market gain. And then since then, we've lost a large portion of that. Now, there's a few reasons for this, and if you're looking at this thinking, oh wow, you can lose all of your money, just like that in such a short space of time, but when we started investing in this account in September, October, November, these were months where the market really rallied, and in quite, increases which aren't normal. So I was always expecting a bit of a market correction to bring it down to earth, if that makes sense. So yeah, it made for great viewing for the first few months because you kept seeing the number go up and up and up, which is great to see, but I was expecting things to kind of be corrected. So yeah, not too concerned there. Now for the month of March, what have we added? So for anyone new here, my partner and I add £60 to this account. So that's £60 combined, not each. I think it's quite an easy commitment, £60. I don't think that's too unobtainable for the average person. But then, given that the market was kind of declining, it looked like a good buy opportunity, while, this fund had declined and is essentially cheaper than it normally is. So we put an extra £50 in there. So you can see here, for the month of March, £110 has gone into this account. So yeah, you can see the current ending balance is £1,250 and 8p, and the rate of return is just 1.34%. But again, I think we'll see a big rebound on this over the remainder of this year. So it may look quite low for now, and you might be thinking, well, maybe you should have just put it in a cash savings account, but that's really not what this portfolio is about. I knew we'd be playing the long game, so yeah, these dips don't really concern me. If we go to the graph, so this is a good graphic, you can see we deposited around £500 back in September when we opened the account, and then we've added increments, and some being larger than others over that time. So you can see slowly it is growing, which is that's exactly what we want to see. The portfolio went up to £1,264.70 there, and then you can see it started to dip from there. We've then added obviously a bit more money in this month, the extra £50, which has brought it back up a little bit, but yeah, still quite a decline from where we were. But ultimately, not concerned at all. We'll continue to keep investing month after month in this account. And again, another sort of snapshot, if you like. You can ignore the cash bit because that's just when cash is in the account in between it being invested. So we invest on the 1st of every month, but yeah, ignore these figures. They're kind of wrong and kind of irrelevant for this portfolio. Every single penny will be going within this global all-cap index fund. And the kind of average returns from a fund like this is around 10% per year. An average savings account, obviously the rates have been coming down recently, so you could be looking at a sort of 4%, maybe 3% interest rate per year being in a cash savings account. I'm hoping to average around 8 to 10% with this account, and like I say, we've only been going around sort of 6-7 months, so loads of time to ride the ups and downs. For anyone new here, I'll always touch upon the Insights tab. I think it's a really great graphic on this Vanguard platform. You can see here that 100% of this fund is invested in equity. That basically means companies. Equities are stocks. You can see the top geographical regions as well. 67% of it being in the US. Now, going back to what we said earlier in the video, the US market has really suffered recently, which is probably where the majority of our decline has come from and that pullback, because our global fund has such a strong portion of it in the US market. So again, I'm not too concerned, but I hope that gives a little bit of insight as to why it's been pulled down so much. You can see a bit of a split in Europe here, 4% in the UK as well, Asia Pacific as well, 11%, and then the others kind of make up the smaller percentages. Again, here gives you a really nice snapshot of, I believe there's over 7,000 companies in this particular index fund, but this gives you that graphic of the top 10 investments. So we can see of that money that we have invested, 3.8% of that is invested in Apple, 3.2% in Microsoft, Nvidia, so on and so forth. And I'm sure over time, and especially the next 18 years in which I'll be investing in this for my daughter, these percentages will likely change as certain companies grow and others decline. So yeah, it'll be interesting to monitor that over the coming years. And again, sector allocation. It's a similar sort of graphic. It kind of shows which sectors that's been split into. So in terms of moving forward, just because we've had a bit of a decline, my investment strategy is not changing at all. We'll continue to deposit that £60 on the 1st of every month, and around Christmas, birthdays, or any time we have a bit of extra money, we'll obviously deposit that as well. If you're thinking of investing within a junior ISA for your child, you get a £9,000 allowance per year tax-free, which I think if any parent are able to put £9,000 away for their child each year, that's good going. But it's nice to know you've got that kind of buffer, that you're not going to get taxed on anything within this. So yeah, not the most glorified month compared to some of the earlier months, but I think these results really give a transparent view on that it's not all roses all the time. It will decline, and to expect that. And you might notice from my reaction, I'm not concerned. Other people might panic in that and think, oh, I'm making a mistake, I need to pull this money out. That's the worst thing you can do, really, in this scenario. The way I see it is that as long as the market is declined or it's kind of lower, Each time I buy, I'm buying these stocks and a portion of this index fund at a discount, which means when the market does rebound eventually, I'm going to profit even more from that. So there you have it, a quick snapshot into the portfolio over the past month. I think this is a great reminder that the market can go up and down, but the key is to just stay committed and keep investing month after month and focus on that long-term goal. Now, I recently posted a video covering my thoughts around investing in a market crash and also a market correction. If the recent decline in the market has been something that's bothered you, then I recommend watching that video as it might give you a slightly different perspective. That wraps up this month's portfolio update. If you've got any questions, do make sure you leave them in the comments section and make sure you like and subscribe for any future content. Thanks for watching, and I'll see you in the next one.